All right, everybody, welcome to another edition of This Week in Crypto. I am your host, Brian, here with Dino, and we are very excited to present a very high-priced this week update about what's happening in the markets. As many of you may have seen today, we are at very close to a three-year high now at about 18.6K for Bitcoin as of the time of this writing, and just a tad over 500 at about 505 for Ethereum. For many, this is unexpected. For others who've been optimistic for quite some time, this is a long time coming, and it's been something that we've seen hints of in our on-chain and social metrics, but to say that this was going to happen this soon while MVRV and daily active addresses were looking a bit bearish, it's obviously a bit surprising, and we'll be going through what we see as things that justify this price rally and things that may contradict it. So we're going to dive into plenty of things here and try and figure out whether this price jump has been sustainable for not just Bitcoin and Ethereum, but for many altcoins, as you see here over the last 24 hours, or if it's a good profit opportunity, right? Obviously, nothing that we'll be discussing is investment advice, but we encourage you to do your research based on all the metrics that we have here on Sanbase, particularly if you're a pro member, because there's plenty of hints that are in the cards right now as far as what will be happening next, and we're gonna jump into it the best we can here. So as many of you know, we typically like to start with the screener. We're going to keep this brief because we're going to spend the majority of the call, myself and Dino, talking about what's happening in Bitcoin and Ethereum, and then take requests at the end about some various other assets you guys would like more information on. So as we can see, over the last 24 hours, pretty mild rise for Bitcoin. It seems like more. Remember, guys, the higher these numbers get with the price, the less, a $300 jump will matter. If it's, 5,000 to 5,300, that's, more like a 7 or 8% jump, whereas 18.2K versus 18.5K, as we can see, only about a 3.3% jump. So yes, still positive. Just keep in mind, this isn't, an absolute surge in Bitcoin over the last day or so, like it seems to a lot of people. Ethereum, of course, the talk of the town right now, because it reached a plateau that it hadn't seen since early 2018. I think it was February. Don't quote me on that. Might have been February or March, or actually a little earlier. Could have been mid-January when it was last year. Either way, it's almost a three-year high when it comes to Ethereum's price, and a lot of people are going to be wondering what's happening, whether it's going to keep on zooming up to 600 now. I'll go over that more in a moment. As for other notables, we of course had Polkadot, we had Waves, we had SUSHI, which is still a very polarizing asset, and I believe Dino will be touching on it a little bit later on this call, along with Wi-Fi, Hedge, Decred. Many double-digit returns just in the last 24 hours. Strong, Curve, and Cybervein, among many. As you can see, there were only about 4, 5, 6, 7, 8, 9, 10. Yeah, 17 of the top 100 coins actually lost money, and most of them were just barely in the red. So obviously, very encouraging 24 hours here. All right, let's look at daily active address divergence, which may or may not have loaded right now. I'll give it some time to load here, guys, and we'll start with something else. What I'll show right now is the actual raw daily active addresses that have been pumping into both Bitcoin and Ethereum over the past year. As we can see here in Bitcoin, for those of you who tuned in for many of our recent calls, we had seen a rise, but it was sort of plateauing, right? Up through October. We saw these orange bars here representing the amount of unique addresses going into each respective network, particularly Bitcoin in this case, rising, but not quite rising to the extent that we would get excited about for many projects. Bitcoin, of course, being the most important because it's going to be the telltale sign as to whether the entire crypto market will sustain these types of price levels. As we can see, we had that drop off in late October that was very concerning. Despite the rise, that was showing a bearish divergence, but through the FOMO and through the excitement over these new price levels above 15K here in the beginning of November, we were able to get big 2-year highs in terms of daily active addresses. We actually peaked up at about 1.2 million, had a drop off, and then we got a kind of a second coming of 1.19 million, which was basically the second highest in the last 2 years. So we are seeing some pretty high daily active addresses. If my model loads, I can show you what that means. It may or may not load in the next couple of minutes, but I'll continue to try and refresh and get that going. But in short, the story that I am seeing is that the DAA is rising, but not quite to the extent that price is, right? We have been getting bearish signals, and actually what I can do is I'll show it off in our DAA divergence we have right on Sanbase. So if you're a pro member, by the way, guys, you can go down to indicators here. If to activate it, you'll just want to go to account settings, and you'll see the beta mode right here. And you'll just want to enable that and then go back to regular Sanbase, and you'll suddenly see this indicator bar in the menu. Add that, go to adjusted price DAA divergence. And as we can see, lots and lots of red here still. And essentially what that means is even though DAA is rising, it's not rising nearly to the extent of price. Therefore, proportionally, when you look at all of the DAA over the last 5 years or so versus all of the all the price markers over the last 5 years, these are historically not nearly as high compared to the output we've seen compared to these. And that's why we have all this red. That being said, we've seen incredible things happen over the last month or so. It doesn't necessarily mean this rally is over. It just means that in terms of one of our most important on-chain metrics, unique addresses interacting on the network, this is looking like a bearish divergence, even with these two big 2-year high DAA DAA outputs that recently came. Okay, looking over to Ethereum now. I have it in more of an area chart here, so don't be bothered by the fact that it's looking a lot different. If I highlight daily active addresses right here, this is the same metric we just looked for Bitcoin. It's been more tame, and we haven't seen those, other than the one single day that happened here on October 14th or so, it looks like. Yeah, 532,000 DAA. It looks like mostly we are still kind of in low territory and not quite seeing the rise to justify Ethereum's jump here, at least in terms of unique addresses interacting. So it could be that there's a little more whale movement, a little more large trading going on that's propelling the price, but it isn't being justified by many, many, many different addresses all interacting at the same time on an increased basis. And when we talk about new addresses, we can actually look at network growth here for Ethereum and ERC20s. We don't have this metric for Bitcoin, even though we will probably at some point, but what we do have is this for Ethereum and others. And it's showing kind of a similar story, probably a little more encouraging than daily active addresses. It does look like we're getting a lot of new addresses being created. I wouldn't call it extremely bullish, but it's looking like we had this high here on that same day. We had the spike in DAA on October 14th. We had kind of a second one on October 21st, and actually recently over the last few days. So this is what I'm talking about in terms of a foreshadow metric. Network growth actually had a pretty large spike, even though daily active address was going down a little. See the orange here? The tan actually had kind of a spike, and this was the highest we had in about a month here, of about 115,000 new addresses being created on the network. So keep in mind, guys, using DAA and network growth in tandem can really merit some good results and give you a lot of hints that are behind the curtain that you wouldn't see with just one or the other by themselves. And of course, the pink and red here, I just drew these as moving averages to give people an idea of how things are fluctuating without all of these jagged edges and noise in the graphs. So we're looking at the last 6 months here. I'll actually jump it out to about a year. And you can see that daily active addresses and network growth were both climbing quite rapidly from about the mid to late January. They peaked in early to mid-August right here. And since that time, the moving average kind of dropped down up until we got to early mid-October. And since that time, it's sort of risen and not quite to the level of early August. I would be a little bit concerned by this. I don't think that we're quite getting nearly the amount of address activity that we should. And if we go down to indicators once again and go to adjusted price DAA divergence, we can confirm that it's looking pretty similar to Bitcoin. Keep in mind the current date, guys. This is a projected number, so this has a little more room for error. So don't take this as like the all-time low for DAA divergence just yet until the market day is over. We still have about 10 hours to go. But you can still see here over the last few days, it's been pretty bearish, and I would need to see quite an uptick like we saw back here to change my mind about this being an overwhelmingly bearish metric right now. That being said, we have some other ones.
Just before you continue, yeah. Brian, just a cliff note here that I suspect, or I'm probably pretty skeptical that the amount of daily active addresses for Ethereum is going to pick up in the next couple of days at least, just based on the fee distribution that we've been seeing over the past couple of days. So if you want to go over to Sandata, or I can show my screen for a bit, just to show that there has in fact been an uptick in the average daily fee to interact with the Ethereum network daily transaction fee over the past couple of days. For the first time in, I think, what's about 2 months, we've had an average fee above $2.5. That happened 1.5 days ago. So this sort of, after pretty much almost a 2-month decline in the average transaction fee to interact with the Ethereum network, once again we are seeing it start to rise. Now, what we've seen happen before, actually, you want me? I can share it. I think it might be a private chart. Yeah, let me just share my screen real quick so everybody can see what I'm saying. What we've seen before happen in these types of events is a strong decline in the amount of interaction with the Ethereum network, which absolutely totally makes sense, right? So, okay, you can see this sort of several massive spikes in the average transaction fee to interact with the Ethereum network during the sort of DeFi summer period, and these two in particular, they I think coincide with the launch of specific tokens. This was Uni, and I think this was SUSHI. However, like I said, you can see here after pretty much a 2-month decline in the average transaction fee, over the last couple of days, we have seen it rise once again. This could, of course, be due to a number of different reasons. Obviously, it can be just due to a more sort of complex smart contracts being used. Overall, however, this type of rise, should it continue in the next couple of days, it's almost inevitably going to price out small return interactions. People that are used to interacting with the Ethereum network, not necessarily for high ROI events, but just sort of doing it on a daily basis, maybe doing some slight rebalancing, maybe whatever it is. If it's anything that's going to cost you more than $1, I think most sort of retail users are going to have second thoughts about interacting with the network unless they absolutely have to. So the way that we can kind of prove that is that if we go to Ethereum, and if we'll look at the last 6 months and daily active addresses for Ethereum, so we can see this sort of drop off here. Let me zoom out to the entire year. You can see this massive rise in the amount of active addresses coinciding with Ethereum's rally. And then as these fees started to get incredibly, ridiculously high, we have seen a coinciding dump in daily active addresses. Now, if this indeed happens to be the case in the next couple of days as well, we might see a similar retraction in the amount of on-chain activity that we see on the Ethereum network daily. Now, the good news is that this could be an outlier because most of these, at least these exorbitant spikes, previously have been, first of all, short-lived, and second of all, they've been prompted by specific popular tokens being launched, right? So in the past couple of days, we haven't really had that sort of an event. So I'm hoping that this is just a couple of days of an outlier. But if we see it coming into the next week, we are going to see a decline, I suspect, in the general sort of daily activity on the network. How is that going to coincide with or correlate with the price? If history is to judge, it could it could negatively or adversely impact the short-term price action. But it remains to be seen. So far, Ethereum, both Ethereum and Bitcoin have kind of been able to defy the lack of on-chain activity, which I think we've talked about last week, being due to the fact that we don't really think retail is exactly in yet into both Bitcoin and Ethereum. There's a number of on-chain indicators that point to the fact that this latest rally has mostly been propelled, or not mostly, but it's been, let's say, spearheaded by large addresses and institutional money and interest. So I think both in terms of Bitcoin and Ethereum, we're still not actually seeing the retail sector and the crowd pour in, which on the one hand is concerning, but on the other hand can be optimistic if we kind of finally see this uptick in days and weeks to come. So just a caveat about what you're likely to see in Ethereum's active addresses in the next couple of days is probably another decline, especially since number one, we're going into the weekend pretty much almost every time. The reason why I see these zigzags is because Ethereum's and Bitcoin's daily active addresses tend to fall off during the weekend, and you have a rising daily average fee on the network. I think we are probably going to see another dip in the next couple of days as well. So just keep that in mind. Yeah. Let me start presenting.
Awesome, thanks. All right, so some other metrics to look at here. First things first, it's good to look at what's happening on exchanges in terms of the overall supply, the amount that's inflowing and outflowing as far as tokens at any given point. And right now, it's mostly encouraging signs right now. Coin supply on exchanges, percent of total supply. This is a really, really powerful metric that is available for Bitcoin, Ethereum, and many, many other assets, mostly ERC20s on our platform right now. Highly encouraged to check these out. Basically, what it's doing is telling me at any given point how many total Ethereum in terms of the ratio of the overall supply are on exchanges at any given point. These are coins that actually can be sold, suddenly traded for large amounts, etc. And generally, the less that's on a platform, the better chance holders and investors overall are content with their investments and aren't going to make drastic moves, right? Obviously, there can be exceptions, and even when it's low like this, you can see a whale suddenly sell off half their stack. You never know. But all things considered, the lower the coin supply on exchanges is, the better. I'll back this up to a year. And we can really see the inverse correlation here, right? As the supply on exchanges goes up, that's when we have these big dips. As we, even before Black Thursday happened, we were getting hints of this. Notice this metric here. It's showing anything over about 15% starts to get pretty dicey. Obviously, we were still able to rise here, but when it got up to over 16, that's when it ended up being a little bit too high and it dropped off. Now, obviously, even after Black Thursday, this was kind of an exception and the price was able to rise despite this. But for the most part, when it drops, that's when you see these big rises going on. And that's what happened. We got a pretty major foreshadow of it as the coin supply here in pink started to drop off huge. And now we're at a point where we haven't been anywhere near in the last year. I can even back it up to the last 2 years so we can see historically what went on. The last time it was even close was in May of 2019, but it's still not as low then as it is now. It was at 13.4%. Now it's at about 13.3. So a good sign for Ethereum holders, as not a lot of supply is actually on exchanges at the moment, and that's allowing price to propel upwards the way it has been. I'll take that off now so we can look exclusively at the amount of top holders that actually have non-exchange bags right now and how big those bags actually are. We had a huge rise up as we were reporting all summer long about the top 10 holders accumulating more and more at a rapid pace here starting in July. And it went straight from about 7.75 million to a peak of 13.14 million. So not quite a 2x rise, but maybe a 1.8x rise. So that's a massive, massive accumulation that we saw. Now notice that very recently we started to see a drop off. This is something to watch out for because they may have been waiting for this $500 mark. In fact, they did sell about maybe, it looks like about 3 or 4 days before this $500 mark rise. So I take that back. They did look like they dropped off considerably on the 16th when we were at about 460. And despite that, price was able to rise. Just keep in mind that top holders, this could be the start of a little bit of a drop off, or it could be a bit of a hiccup. So for you pro users, make sure you're monitoring this metric to see whether this is the beginning of a decline back down to here, or if it's just a temporary divot and they're about to get their bags back now that they see it over 500. Obviously, 500 is a very big psychological barrier that many did not anticipate we'd hit, and now that we're here, it triggers in a lot of people's minds that we can continue to surge upwards, and whales aren't immune to this feeling, so they could decide that it's time to get back in here. Also notice,
yeah, just one thing to mention, I'm not 100% sure of this, but this also could be, there was news, so this was the November 18th, right, that we saw a drop off in the...
It said the 16th, but it could be, give or take a day or two.
So on the 18th, it was announced that a Dubai-based firm called IBC Group has invested or staked about 100,000 Ethereum. So that's about what, give or take, I think it's about $10 million overall. So it's one thing to keep in mind that we might be seeing this drop off, not necessarily because of a rising sell-off pressure, but instead because large holders are now moving also into the staking game. 1 week before the Ethereum 2.0 is supposed to kind of the staking Ethereum is supposed to end in a week, or the amount of Ethereum staked. So it could be also due to large addresses now slowly moving to stake Ethereum, getting ready for the Beacon chain launch. So just one thing to keep in mind there.
Yeah, good point bringing that up. Yeah, so exchange flow balance is another one that I like to look at. Basically, the large spikes on the high end are indicative of potential sell-offs, even if they're short-term. They tend to be pretty reliable. If you look at the largest ones here, you can see the exchange flow balance here, the spike to about 73, actually 161K. That triggered kind of a taper off here that eventually had a bit of a decline back in June. You see this one back on August 13th for 139K. This was another temporary top that ended up dropping down. So obviously these spikes matter, but look at the low, the exchange flow balances off exchanges. These mean that coins are being moved off of exchanges and into offline wallets. When these happen, it's a very bullish sign. So obviously we had our lowest since summer back on November 3rd, a couple weeks ago. And that happened right when the huge rally started from 378 up until now above 500. We also had one back in June that was our largest over the last 6 months. So when you see these low exchange flow balance spikes, that's a great sign. Vice versa, when you have top ones. Right now, we're not getting anything crazy. This one's a little on the high side, but nothing extreme. Obviously, when we saw ones above around 90K, these four here, these were good triggers that there was going to be a temporary sell-off, but it wasn't much, and it was able to climb back up with the help of Bitcoin's rally over the last couple of months. So very important metric here as well. And we may actually have a model for this in the future. Don't quote me on that, but it's something I want to work on. Okay, another one, we already got that. Social sentiment, guys. I want to look at Twitter's actual mood when it comes to Ethereum right now. And if we go down to the very bottom here, note we're on graphs.santiment.net/social. If you have a Sanbase Pro account, this dashboard is at your disposal to use anytime you want. And I am here at the very bottom chart, Ethereum weighted social sentiment. And what this is showing is the amount of volume being discussed about Ethereum multiplied by the ratio of positive versus negative commentary. Right now, we're seeing that it's at a pretty neutral point. We've climbed just a little bit. Obviously, we're going to need about another day of data to really see how the price is being reacted to now that it's above 500. There's obviously a delay in price on this chart, but you can still see mood kind of come in at least up until the previous day. So I would anticipate that we're going to go into the positive after today, unless Ethereum suddenly has a huge drop off before market close. And when we do have these positive spikes, obviously that's when the tops happen, just like I just showed with exchange flow balance. It works a similar way with weighted social sentiment. When we're up high here, that's when the drop-offs happen. When we're low, that's when the bottoms tend to happen. And we're at a neutral point now. So we'll probably have a very good update about this in the next week, because it's about to get very polarizing now that we're above 500, where many people didn't want it to go to 500 this fast, or many people were waiting for this and are now becoming euphoric. So
yeah, there's one other thing that we should mention when talking about social sentiment in the next week for Ethereum, and that is the beacon chain. Basically, the fact that we are probably, or very likely, according to some prediction markets, about 70% likely to miss the deadline that's needed to kind of to have 524,000 Ethereum staked. So for those unfamiliar, the Ethereum 2.0 deposit contract has gone live, I think, on November 2nd or 3rd. And the idea was that the contract needed to receive 524,000 Ethereum, or have about 16,000 validators, in order for the beacon chain, or the phase 0 of Ethereum 2.0, to go live on December 1st. This the deadline for 524,000 Ethereum to be staked is 1 week before December 1st. So it's basically coming in like 3 days, right? At the moment, we are about 116,000 Ethereum in. So we need about 400,000 more Ethereum to be staked over the next 3 days in order for the deadline to be reached. This is highly unlikely, at least in my opinion, to happen. So we are probably going to see a bit of a delay in terms of the beacon chain going live. Now, Vitalik has already, in a recent AMA, discussed this and said that, it's not necessary for the launch of phase 0 for all 524,000 Ethereum to be staked. The beacon chain can be launched even with less of it being staked. So this is not sort of a hard cap that the network is looking forward to. However, the moment that we do not hit that deadline, the question is, what is going to be the general crowd sentiment towards Ethereum? I think it's going to go, if that happens, I think we're going to see a bit of a bearish sentiment and bearish overtones for Ethereum in the short term. And if that happens, obviously, keep an eye on this chart in the next 3 or 4 days once we cross that threshold, that deadline, 1 week before December 1st. And keep an eye on, social media and how people are sort of reacting to the news. As Brian has said, and as he's showing here, generally these bearish overtones tend to be positive for the price of Ethereum. What we don't want to see is we don't want to see a rise into extremely bullish sentiment. And I think we're okay with that as long as the beacon chain doesn't go live on December 1st. So the market euphoria might be delayed a bit with the ETH 2.0 being delayed itself. And if that happens, if we go deeper into bearish overtones for Ethereum, this could, all other metrics, staying the same, this could have a positive impact on the price. We'll have to see. Like Brian said, currently we're sort of in the middle of the way. We're not really bearish, but we're not bullish either. We're sort of in an ambivalent territory. The crowd is undecided towards Ethereum. So keep an eye on this starting Monday and Tuesday when the deadline finally gets breached. Keep an eye on this metric and where we go from here. If we go down, and if all other fundamentals remain strong, which I think some of them are, some of them aren't, but if we go down, it could reflect positively on the price of Ethereum in the short term.
Dino, do you think that the knowledge that is somewhat public already that this could be a bearish event might be partially baked into this graph?
Indeed, I do think so. And I actually, so from what I've seen on social media, there are basically two groups or two schools of thought about what's going to happen. There are people that think that we are going to dump once the November 24th deadline sort of passes, and we don't have the beacon chain sort of conditions met. However, there's a fairly strong and influential group of pundits that I've seen thinking that the beacon chain in general is going to be a non-event. I tend to disagree. I think there's enough degens in the crowd that are tracking this type of event. I mean, look, when the Ethereum deposit contract went live, Ethereum 2.0 deposit contract went live, 2 days, in the next 2 days, you couldn't scroll through your timeline without seeing that sort of bar getting filled at least like 3 times in a scroll, right? Pretty much everybody was talking about, oh, look at how fast the staking Ethereum is rising. We're definitely going to meet the deadline. Ethereum is going to go to the moon. There was a lot of hype surrounding the event. So, and actually, I think, Brian, if you go to that, can you go to that latest spike in Ethereum sentiment? When was it? Yeah, so November
This
9th.
big one?
So, November 9th. So basically November 8th, November 9th, basically 4 days after the deposit contract went live, right? And this is what I mean. I mean, that ties in perfectly with what I've seen on my social media, is that a lot of people were very, very positive and optimistic about Ethereum 2.0, the beacon chain going live on time. So the fact that now that is less and less likely, I think it's going to rub some people off the wrong way. I don't think that's going to necessarily be negative for the price of Ethereum, because like I said, and like Brian said, bear sentiment does not equal bad price activity for the coin. At least
Right.
in the past, it hasn't for Ethereum and Bitcoin. It's going to be, I think, a very interesting week ahead for Ethereum, much more than for Bitcoin. So yeah, look, very excited to see what happens in the next couple of days.
Yeah, very interesting. Obviously, both fundamentals and actual prices can factor in quite significantly when it comes to social sentiment here. And we'll see just how much of the crowd actually cares about Beacon Chain. Dino thinks it'll be significant. I think it'll be notable at the very least. So we'll for sure see some reaction to it. We'll just see how that clashes with the actual price when that comes, because if we're up around 550 or 600 and this kind of trajectory continues with price, there might be kind of a battle between people who are bearish about Beacon Chain and people who are just euphoric about the price being so high. So it's always very fascinating to see how people react. And as many of you know, crypto markets are basically dictated by sentiment, with on-chain factors also being part of it. But sentiment is a great, powerful tool. So if you don't have Sanbase Pro yet, 45 a month, definitely worth it. You can have charts like this as well as everything else that we've shown so far. All right. MVRV. So before I go into this chart, which I think is a very powerful tool, I'll just show you the rough MVRV for Bitcoin and Ethereum here. Bitcoin and Ethereum listed 1 and 2 here. I'll look at Ethereum first, as it of course refreshes. So I'll put it on our Sanbase instead. Don't need to download as a PNG. We get network value up, and we're going to look at the 7-day. Looks like it's being a bit laggy at the moment. Let me give it a quick refresh. Sorry, guys. On-chain network value. We'll do 7-day. Oh, I see. It's not liking it because it had another indicator up there. One more time. On-chain. Remove this. Remove. Get rid of that. We'll go to Ethereum. Network value. 7-day. 30-day. 90. 180. And 365. So I chose these days because they tend to be the best sweet spots for what average trader returns actually matter on a day-to-day and week-to-week basis in the crypto markets. MVRV, for those of you who don't know, is basically the totaled average of returns estimated by our platform for any given time for traders who began their investment at that period of time. So 7-day means that they started their investment a week ago, and these are their average returns based on all the FOMO and FUD that was baked in between 7 days ago and today. Same for 30, 90, 180, and 365 days collectively. So right now, we are seeing a mostly positive trend in returns, especially in the past day. Obviously, I'll just go to the last day. That's all we really need, or the last week, yeah. So as of earlier today, this was around market open. This was, we were already seeing universally positive returns for the average traders. If you look in the top left there, as I'm highlighting over the most recent MVRV data, we had 7-day MVRV of 6.8%, which is already about 1% per day. That's pretty significant. 14% for 30-day, 23 for 90, 37 for 180, and 59% for 365 days. These are all pretty massive numbers. And overall, when we see positive returns for MVRV, that means the crowd is already very euphoric about it, especially when it's all positive, like we're seeing for all 5 of these time frames. We tend to get the best returns when MVRV is in the negative, and right now we're basically getting a contradiction to that and a further rise than when it was at 470 at the time of this MVRV metric, and we're obviously above 500 now in spite of all this. But long term, if I go to the last year, you'll see that when MVRVs are high, like they were universally in mid-February, right? All 5 were in the positives, as you can see highlighted there. That's when the tops hit, and we eventually have these. Now, obviously, we wouldn't see something like Black Thursday very often, but we could see, something in the range of a 10 or 20% retracement at some point, as we saw here as well in late August, early September, right? That's when we again had universal high MVRVs for these 5 time frames. And then literally 2 days later, we saw a huge drop off just so we could get back to normal. Now, MVRVs are very important because they will hover around 0%, no matter what asset, no matter what time frame. It's hard to see here, but generally these numbers are all hovering around 0% over time. This is the last 5 years of Ethereum. And right now we're basically in that universally high spot, which tells me that there is going to be some event to at least shake out the weak hands. It doesn't necessarily mean there's going to be a big drop off all the way back to 470 or below, but it does mean that there's either going to be some sort of FUD or some sort of FOMO that causes people to get in when they shouldn't or drop off too early and get these returns back to neutral territory like we had in late October here. So something to keep in mind. And I'll go back to MVRV, which still doesn't want to show up perfectly. Actually, it looks like it's mostly working now. So basically this chart is showing how close any asset is to its either opportunity or danger zone. When it's in the red territory, that means that historically it's in the bottom 50% in terms of bearish territory. And both Bitcoin and Ethereum are there right now. Now, this dashed line is important because this represents the very bottom 10% bearish divergence. And if it crosses that, that's typically the time when there's going to be a price correction. So we're close for Bitcoin right now at negative 0.88. It'll hit this one's right at -1, just for reference. And then Ethereum's at negative 0.77. So all things considered, 0 means we're right at neutral territory for MVRV, and negative 0.77 means we're close to all the way there in terms of a danger zone for MVRV based on history. So going back, just to give you a reference, when we're in universal territory like this, that's when a danger zone occurs. Right now, universal territory, danger zone, but not quite. This means this is lining up with what we just saw on the model. This is at about negative 0.77, and it's close to those danger zones. But if we see like 7-day returns get up above 10% returns, or 30-day get up around plus 20% or more, that's when you'll start seeing a cross below -1, like we're seeing for a few of these different assets right now. Wire Wi-Fi is a very interesting one because it's way past that at -2 right now. The only one I see in a clear positive territory right now is Fetch, and it looks like that's because there just hasn't been a lot of movement for it, and a lot of when it has moved up, not a lot of traders have been fully long or in their positions the way they could have been. So really powerful model right here. If you have Sanbase Pro, definitely message us on Discord. We'll help you get set up with that.
Yeah, it's
Another,
also just a very interesting thought experiment. Like, I don't have an answer 100% either way, which way this is going to go, but what you are going to see in the next couple of days. So what Brian is basically saying, there's a lot of unrealized profit right now in both Ethereum and Bitcoin. For Bitcoin, even more than Ethereum. Ethereum is high, but it's not like, it's sort of, it can go higher. The question is, how are these people going to react if the deadline passes and we haven't hit the conditions or the threshold, which I don't think we are going to. So the question is, if we have an influx of bearish sentiment, right, and the price of Ethereum starts feeling a little bit shaky, are these holders that currently have between, I think, like 15 to 40% profit that is currently unclaimed, are they going to start claiming some profit and exiting the market? And if that happens, how is the price of Ethereum going to react, right? So that's why this is such an interesting event in the next couple of days, is trying to figure out what the market sentiment is going to be and how the holders are going to react, because currently they're sitting on quite a lot of unrealized profit. And if we see shakeups in the market, they might just decide to get out for a while, right? However, on the opposite side of that spectrum is, if it's just sort of a weak hand, if there's enough buy pressure, right? Which we can kind of see if we see, for example, rises in exchange inflow in the next couple of days for Ethereum, that's going to be early signs of people are exiting the market because, I don't know, they're scared about ETH 2.0, or they just don't think that we are going to continue above 500. So if that indeed does happen, and the market doesn't react, that's usually what it means, is that there was enough buy pressure that people were able to absorb this weekend capitulation. It's basically just redistribution from weak hands to smart money, strong money, which actually acts as a support for a sustained rally. So either way, I think just keep an eye on these charts in the next couple of days. I think it's going to be very, very interesting.
yeah, agreed. Thanks for that explanation. Unrealized profit is a good way of putting it. It basically means that holders are content with their investments and aren't taking profit or selling despite being well into positive territory, like I was showing. By the way, we're above 50 viewers, so thank you all for giving us one of our highest viewerships to date. Really appreciate it, everyone. Last thing I want to show before giving Dino the spotlight here is our NVT model, which is essentially measuring the amount of token circulation, which is the unique amount of tokens being moved on a per day basis, or in this case, we have it summed to months. And that's being divided by the actual market cap. So essentially the price divided by token circulation over time. And the better that ratio is, the lower these bars are, and they'll be green if they are in low territory compared to these trend lines, 4 different trend lines using 6, 11, 16 month and all-time moving averages. So right now, as we can see, we're on our 7th straight month, and it's very likely going to close in green for November, which the model has reacted to fairly perfectly. As we could see back in 2019 up until January 2020, we had 7 straight months of red, which coincided with a big drop in price because the amount of unique tokens being moved was not up to snuff compared to what it should be based on price at that time. So we're seeing the inverse of that now with 7 straight months in green territory, and price has propelled as a result. So this is a very powerful model, and the last couple of days have been right about as expected for the average day we've seen so far in November. This is, I think, the bigger reason that the price has been able to exceed 500 over daily active addresses, which has been mostly an ignored on-chain metric in terms of how price has reacted to it over the last month or so. So NVT has essentially allowed the price to propel upward due to the amount of old dormant coins that are now being moved on a regular basis. Even as the price has risen, the ratio has just gotten better and better and improved along with those new high price levels. So really encouraging to see here. And while I'm on the model really briefly, I'll just show Bitcoin, which is still looking semi-bullish. We're on our 2nd straight month of increased token circulation for Bitcoin, and that's obviously allowed Bitcoin to cross above 18.5K today for the first time in 3 years. So encouraging to see here. Obviously, Ethereum, even when it's green, it's going to somehow be somewhat be tied to Bitcoin. So in June, July, August, when it was a little more bearish, even though price rose, this meant a little more polarization for altcoins, and it's something to keep in mind. So Bitcoin and Ethereum are going to be very important for the rest of the altcoin market and cryptocurrency overall, particularly Bitcoin here, which is looking semi-bullish right now. So encouraging sign, and we'll have to see how these last 10 days shape up for both Bitcoin and Ethereum here on these models. That being said, we're at about 3/4 past the hour. Want to make sure Dino has time to get to his segments, and we'll try to answer questions at the end here, guys.
All right. Great stuff. Thanks, Brian. Okay, guys, I'm going to show 2 things. In the meantime, any sort of coins that you would like us to do some impromptu analysis about, please let us know in the comment, and we'll get to it at the end of the stream. So my segments are going to, so we talked about Ethereum quite a bit, which I think, for good reasons. I think it's going to be more interesting than Bitcoin in the week ahead. I could be proven wrong. However, I want to focus at least a little bit on a particular relationship that I tend to write about quite often between stablecoins and Bitcoin, and how it has progressed into the rally. So anybody that's a Sanbase Pro subscriber gets these weekly pro reports. And this is a report that I wrote 2 weeks ago, where I pointed to the fact that there seems to be growing buy pressure in stablecoins data. So in short, you can find this on insights.santiment.net. Gary, if you can share this in the chat, that would be also great. One of the points that I make in this report is that as Bitcoin began to rally, we saw a stable but undeniable uptick in the amount of stable coins, Tether, USDC, BUSD, USDT, and a few other TUSD and a few others. a certain and stable uptick in the amount of these stable coins moving to exchanges. So we have seen this similar relationship or similar pattern happen a few weeks after Black Thursday. At the time, there was a lot of people talk about market participants moving into stable coins for the time being because they were worried about market volatility. They were worried that we are going to dump even higher than we were. So there was a lot of talk that Bitcoin was going to start recovering once we see these stable coin holders moving back into the market. And I think this is a pretty good or at least interesting proxy for people moving away from stable coins and converting them into more volatile cryptocurrencies. So essentially what we're basically seeing here is the amount of Tether being moved to exchanges, presumably to exchange for more volatile assets like Bitcoin and Ethereum. So this, I think, to an extent can point to a rise in buy pressure for Bitcoin. So we have seen, this is 2 weeks ago, we have seen upticks in the amount of Tether being moved to exchanges, very clearly coinciding with the rise in Bitcoin's price action. We have seen a similar pattern for USDC. What's also very interesting is that we have seen spikes in the exchange inflow of USDC during various dips in Bitcoin. So this is exchange inflow of USDC compared to the price of Bitcoin. So here, and here, 3 dips in Bitcoin's price action, 3 spikes in USDC's exchange inflow, pointing to the fact that pretty much every time that we saw a dip, there was a concerted effort to buy this dip, kind of providing support for an uptick, for a sustained price rally. And then we've had another sort of wave of buy pressure here before Bitcoin went above 15K here. This was also a similar thing for Binance USD, which actually had its highest exchange inflow ever recorded on the day that I wrote this, pointing to, once again, a lot of stablecoins being moved to exchanges. So let's check in on this same phenomenon 2.5 weeks later. I'm going to start obviously with USDT because it's the largest stablecoin. So this is when I wrote it. I wrote it here, November 7th. You can kind of see what it looked like then. It was sort of a clear uptick. This uptick has continued, especially here before we passed 17K, right? Actually, right as we were passing 17K, we had a strong spike in the amount of USDT being moved to exchanges. Once again, kind of pointing to the fact that there was and continues to be, or at least until here, sort of a concerted effort by certain stablecoin holders and groups of holders to exchange their stablecoins for more volatile cryptocurrencies. And I assume, especially when it comes to USDT and USDC, some of the most active trading pairs are with Bitcoin. So this is USDT. When I look at USDC, I see very similar picture. Once again, a strong uptick in, let's call it a proxy for buy pressure, or the amount of USDC being moved to exchanges, coinciding with a push above 17K. Let's look at BUSD or Binance Coin. Yeah, once again, so actually if I zoom out, you'll see exactly how strong this uptick in BUSD's exchange inflow is. And it continues to happen over the last couple of days here. So something to keep in mind, and one of the reasons why I would definitely suggest subscribing to our pro reports is that we try to find these patterns that aren't necessarily talked about a whole lot. This is something that I've been tracking for almost a year. It's not obviously going to be 100%. Sometimes you see these upticks in stable coins moving to exchanges, which just ends up being arbitrage or some particular sort of black swan events. But very often it seems that there is a sort of correlation between exchange inflows of stablecoins and a rally for top caps, especially Bitcoin and Ethereum. So it's something to keep in mind. Everything here is available on Sanbase for everyone to use. So this is one topic that I wanted to cover. And then the second topic, just briefly, that I'm going to cover before I already see a couple of questions. So before we get to those, is SUSHI. So for those that have not been tracking SUSHI's price over the last couple of days, actually like a week and a half, Sushi has had a pretty good week. So if we look at the last 7 days, it's up 111% in the last 7 days. It's pretty crazy, right? After what happened with Sushi in September, where its founder basically used half of its developer fund, I think about $13 million, and just sold it. And kind of tanked the entire project, and Sushi became code word for exit scams, and it became a cautionary tale for everybody that thought DeFi was a bubble. Sushi became an example of why DeFi is a bubble. Since then, Sushi has very well recovered. Now, there's a number of reasons why, and we wrote about this in this insight here. So I published an insight on Monday on Sushi's 94.5 week here, where we made two predictions. Well, I mean, not necessarily, I don't know if I would call them predictions, but we basically said two things at the end here, and I'll show you why we thought so. We said there may be some short-term challenges for Sushi's price action, because this is what the data has been showing. But in spite of that, or after that, should the recent growth in the coin's fundamentals prove sustainable, it wouldn't surprise me if we saw another leg up in the midterm. So not to toot our own horn, but this is exactly what happened. So let me show you the chart once again, and then I'll show you why we thought this would happen, or this would be a possibility. So zooming into Sushi once again, we wrote about potential challenges for Sushi's price action here. This is what happened in the next 2 days. And then once again, we wrote about sort of midterm potential, bounce back potential for Sushi, and this is currently what we're seeing. So why did we think that this is likely to happen? Well, even though Sushi has been rising like crazy, there were several sort of concerning signals starting to appear in Sushi's on-chain data, which pointed to us that we might be due for short-term correction. All right. One of them is the amount of daily active deposits. So daily active deposits are addresses that are being used to move Sushi to exchanges. So yes, Sushi is a DEX, but and it's a DEX coin, but it's also very actively traded on Binance and Huobi, right? So when you see a spike in daily active deposits, what you're basically seeing is a spike in the amount of addresses moving Sushi to exchanges, presumably to sell, right? So these sort of spikes in daily deposits can sometimes be used as proxy for rising sell side pressure. So we thought that given the fact that we are seeing quite an uptick in the amount of addresses moving Sushi to exchanges, and we are seeing the spike in the amount of Sushi being moved to exchanges overall. So this is exchange inflow for Sushi. This is exchange inflow on Binance particularly, and this is exchange inflow for Huobi. So you can definitely see a rise in Sushi-related sell-side pressure as its price continued to rally. So these metrics pointed to us that we might be due to for a short-term correction because there's a rising sell-side pressure for the coin, which I'm not sure that is going to get absorbed very quickly, because people would have to be buying it, or would have to be okay with buying it at a premium, right? Because Sushi was already up 95% in a week. How many people are going to be happy absorbing this sell side pressure at these types of price levels? I don't think too many, right? And this is what seems to have happened. Now, we've also seen several other, sort of warning signs in Sushi's on-chain data, which I'm not going to go into here. You can read all about it in this report. However, as far as Sushi's fundamentals, we have been seeing a strong sort of stable growth overall, like minor short-term analysis notwithstanding. Fundamentals have been growing. For one, the amount held by top Sushi whales, this is top 100 non-exchange addresses holding Sushi, has continued to grow since the bottom, pointing to sort of increased investor confidence after pretty much a month of just plateauing in their Sushi bags. We have also seen the combined balance of addresses holding between 10,000 and 100,000 Sushi also start to grow into the rally. So large Sushi holders have actually been accumulating more into the rally after being pretty idle in a month prior. And then on the other hand, we have also seen a consistent or stable uptick in Sushi's active addresses over the last couple of days, or actually a week almost, pointing to the fact that, as Sushi's price action has continued to grow, so has the amount of interest in its coin and the amount of interaction with Sushi's native asset. which is usually necessary to support a sustained price rally, right? And finally, one super important reason why SUSHI has been doing so well is the fact that Uniswap has ended its liquidity mining program. And very quickly afterwards, we have seen a massive drop off in the amount of liquidity on Uniswap. And at the same time, we've seen a huge rise in the liquidity on SushiSwap, which is still providing a liquidity mining program, right? And you can see here what it looks like live now, the amount of liquidity provided on Sushi and how it has grown over the last couple of days as Uniswap has ended its liquidity mining program. So all of these things combined, we think provided sort of a perfect storm for Sushi to do very well over the last week. If you want to read more about why we thought this is exactly what would happen, check out this article from a few days ago, and yeah, learn how we kind of analyze the market. So, Brian, any questions that we can get to now?
We definitely have questions about Link and DOT. I saw Link a couple times and DOT recently. So those two would be good, and they're both ERC20s that we definitely have plenty of data on.
Okay. Oh, actually, I stopped presenting. Okay, I can go back and let's look at Link shortly.
Yeah, I'm happy to supplement some on my screen as well.
Sure, sure. All right, let's start with Link. All right, Chainlink. Yeah, I haven't really been paying too close attention to Chainlink over the last couple of weeks, really. I mean, we checked it last week, right? But since then, I haven't really been paying attention. So let's see what's been going on. First of all, let's check out the amount of Link being moved to exchanges and general sort of market sentiment towards it. So here we're looking at daily active deposits for Link, which is kind of just ebbing and flowing. You can kind of see short-term price corrections coinciding with these spikes in daily deposits, like here. But overall, yes, it's a bit high at the moment, but nothing that I would that I would consider too dangerous. And this also happened 2 days ago. So it seems like we have whatever sell side pressure it happened here, seems like it was relatively absorbed. And as far as the total amount of Link being moved to exchanges, so yeah, let me show you. This is the time that a lot of people, we see September metrics as far as exchange metrics are concerned. We see September looking quite a lot like this for a lot of DeFi and ERC20 coins, where people were like, okay, DeFi summer is gone. It's time to get out. And we see this is basically almost 15 days of increased sell-offs of Link coinciding with eventually a local bottom here. So since then, let's zoom out of it just to see what's been happening. And let's change the interval to maybe 4 hours. Okay, so once again, spike in exchange inflows here and here, coinciding with here with a correction, and here with seems like a little bit of a consolidation. But these are just short-term tremors. I wouldn't really think too much of it. It seems like overall there's no like sustained or clear to me signs of consistent sell-offs or sell-side pressure. Seems like it's just short-term or swing trading occurring and the people taking short-term profits. Overall, I think it's worth to actually look at the total amount of activity happening on the network and the trend lines, whether it's growing or declining. So let's look at the last 6 months. This has been Link over the summer. You can definitely see the FOMO and in general the amount of addresses interacting with Link skyrocketing, and then as the fees have grown and as the DeFi summer has started to decline, so has the amount of interaction with the Chainlink token. However, more recently, it's been trending upwards once again. And so if we look at the total amount of addresses daily interacting with Link, at the moment it's about 7,500. This is a lot. So this is why it's not really something that I would necessarily use as a short-term indicator. But if we're looking at sort of midterm or long-term fundamentals, Link has a very active community, not just off-chain but also on-chain. So almost 7,500 daily active addresses is a lot. It puts Link in, I think, the top 10 easily, maybe even top 5 ERC20 coins as far as its daily on-chain activity. And we can quickly figure out exactly how much or where Link stands through our sentiment screener. So this is how this is why I enjoy our screener so much, is that you can use filters to quickly put any metric in more context. So for example, here we're looking at 7,500 addresses daily for Chainlink. So one of the things that we can do is we say, okay, I want to look at all Ethereum-based coins. We choose Ethereum as a market segment here. And then I want to see all of the coins that have had more than, let's say more than 7,000 daily active addresses in the last, an average of 7,000 daily active addresses in the last week. So it seems like because Link has been dipping up and down, it on average it hasn't had more than 7,000. Let's try with 5,000, see if it's there. Yep. So okay, let's say that on average Link has had more than 5,000 addresses, daily active addresses over the last week. So that puts it in top 3 coins. So if you don't count Ethereum, it puts it in top 2. If you don't count Tether because it's the most active stable coin, it's very high up there. It's even more active than USDC and DAI, two also very popular stable coins. So as far as Link's sort of a short-term action, this isn't necessarily going to give you super strong insights, but as far as its like midterm potential, I think Link is doing very well and it's very well positioned. Also, just the general uptrend in daily active addresses is always a good thing. Whether that's going to translate to immediate price rally, I'm not 100% sure. But overall, I think as long as we are seeing this type of uptrend, and as long as other fundamentals are remaining strong, I think this is generally a good midterm signal for Chainlink. All right, let's look at age consumed as well to see. Okay, there's been quite a few spikes. Let's zoom out a bit just to put them in more context. Okay. Yeah, seems like quite often we see spikes in Link's age consumed, pointing to the fact that some long-term holders have been moving their bags every once in a while, but overall it doesn't, like you can see it kind of coinciding with short-term price like reversals very often, like here and here and then here. Also happened just now as we were talking, but overall I think it's fairly consistent, right? It doesn't seem like there's any sort of massive outlier pointing to increased movement of previously dormant coins. It's just kind of a standard activity on the network, right? Now, one thing that I want to definitely look into is the MVRV for Chainlink. So let's look at the unrealized profits of short-term and long-term Chainlink holders at the moment, right? Okay, so currently, let me zoom in just to see where we're at. Show it to me, 9.5. Okay, so we're at about short-term holders. So all addresses that have acquired Link in the past 30 days are currently about plus 9.5%. They're in profit on their initial investment by about, let's say, 10%, right? So historically, we can see that this isn't really close to even yearly highs. We've definitely gone up to 40% on several occasions, above 20% on more than several occasions, and we peaked at almost 52% here on August 2020, right? So if you're asking yourself whether there's a potential that short-term Link holders start exiting their positions and start claiming some of their unrealized profits, what we can certainly deduce from this chart is that in the past they have been more than happy to sit on their bags for a while longer if they believe the market conditions are ripe. Okay, and then as far as long-term holders are concerned, It seems like it's a similar story. So currently we're at about 53%, plus 53% as far as long-term holders are concerned, or all addresses that have acquired Chainlink in the past 365 days. But we've gone up as far as 134% and 200%. So while this might, point to like short-term tremors in the price action, if Chainlink holders believe that we are in fact in a bull market, they're more than happy to chill for a while longer and see their bags start to overflow before exiting the market. So overall, I'm not seeing like anything super dangerous for Chainlink in the like instant future, and some fundamentals are general like midterm fundamentals are looking okay. Let's also look at social volume for Chainlink. 1 day. Yeah, so there's been a slight uptick in the amount of mentions of Chainlink on crypto social media. What you don't want to see is you don't want to see these types of massive spikes in Chainlink social volume, pointing to the fact that the crowd is very much aware of its price action. FOMO is starting to kick in. Usually, what this tends to do to the price is, lead to a short-term price correction, as Lambo and Moon and all those other keywords start, to permeating all discourse, and whales start dumping on the happy crowd, right? So if we zoom out a bit more, we can see this similar thing happening here before this correction as well. We can even see it here before we started dropping here, even before the Black Thursday event. So what we don't want to see is we don't want to see these massive outliers in terms of link related social volume. Yes, we've been in an uptick a little bit, but we're not really close to like all-time highs or yearly highs or anything like that. We can also briefly check out Chainlink's social sentiment. So here I was just looking at the total amount of mentions of Chainlink on crypto social media. This is, by the way, taken from over 1,000 different channels that we track. So this is taken from Telegram groups that are talking about crypto, Discord servers, crypto subreddits, Twitter accounts, private trader chat. So we track over 1,000 different social channels to create this data point. And then here we can look at the actual sentiment towards Chainlink, where all of these messages that we collect that have Chainlink referenced in it, we also pass through a sentiment algorithm to figure out whether they are positive or negative on average. So what we have seen in the past 2 weeks is we have seen Chainlink related sentiment begin to rise on crypto social media, right? It's still not in the danger zone. So what we like, similar to the uptick in social mentions, what you don't want to see is an uptick or a massive spike in bullish sentiment. You can see it here before a correction, see it here before a correction, see it here before a correction as well, right? Even here. So what we don't necessarily want to see is these massive spikes in bullish sentiment towards Chainlink. Generally, I think this is still fine. We seem to be sort of in an ambivalent territory. Let me zoom in a bit just to kind of see it. Yeah, we're really not super bullish. I mean, social media is not super bullish in Chainlink. It's kind of similar to Ethereum. They're undecided, ambivalent, looking to see where the price action is going to go next. So overall, Link is not it's not giving me super bullish vibes, but at the same time, I'm not seeing any major red flags in its on-chain and social data. So take that for what you like. All right, Brian, how are we looking? Any other questions, or should we start wrapping it up?
Yeah, there's a question about Binance Coin. I don't think we should dive deep into it, but what I will say is we are getting some very increased address activity right now. So it's, yeah, you can show the graph really quick, but no need to go extensively into it. I do think that it has a lot of correlation with what Bitcoin's doing, as it often does, since it's the leading exchange on the planet. But I find these spikes to be very fascinating.
Yeah.
And when we get them in bunches, we tend to see a lot of action for other coins, not just necessarily Binance Coin itself. But if you have any thoughts on that yourself, I'm very curious as to what you think here, Dino.
This doesn't look all too organic to me. I would
Yeah.
assume this is Yeah, so transaction volume is definitely in an uptick for as far as BNB is concerned. You can see it here. So the amount of value being transferred on the network is rising, but these types of scattery daily active addresses, they're pointing to some non-organic event. I haven't really. I would need to kind of dive deep into it and see what's prompting it. But these spikes and then massive dips and then the spikes again, not something that points to organic rise in daily active addresses. So this is, I would take this with a grain of salt as far as taking it as a bullish signal in some way.
Do you want to check token age consumed as well?
Yes.
That
Okay.
might be very telling.
All right.
Yeah,
So we've seen,
nothing crazy here
nothing
with
crazy at
tokenization
all.
soon, but
Yeah.
generally when you see spikes, there is a big event with the rest of the crypto markets here. So it is an important metric to keep an eye on if there is a big rise in this metric.
Yeah. Okay. Oh, I see a question about Ren. Okay, let's quickly look at Ren before we end. Everybody's. It seems like every uh, stream
It's a
there's at
popular one.
least one person asking about Ren. Uh, Maybe people know that I like it as well. Okay, let's check out active addresses as well. Fumes for Ren. Okay, on average, it's looking fine. Nothing too crazy. We're not seeing a massive rise in the activity on the network, but on the other hand, we're not seeing massive dips. I think this is probably a new normal for Ren. So if you look at what's been going on for Ren previously, this was a normal for Ren before the before the mainnet went live and Ren BTC also got launched. So it was about 150 addresses daily, somewhere around there. So we've had this massive rise up to almost 1,700 addresses, which is absolutely, I don't think, sustainable for Ren. I don't think there's that much, both speculative and just utilitarian demand for the coin at the moment. Since then, outside of the spikes coinciding with price rallies, we've actually stabilized at around 700 addresses a day, which I think is fairly strong. I think that still puts it in like the top 30 coins on Ethereum as far as daily on-chain activity, which is absolutely fine. As far as transaction volume or the daily amount of Ren being exchanged on the network or between addresses, still seems to be kind of just normalized. Nothing too crazy, nothing too out of the ordinary. I would like to see both of these metrics go on an offensive a little bit to be certain that we can go higher. But they're not decreasing. There's no sort of sign in a let's say a declining interest in the coin as far as its on-chain activity is concerned, right? As far as the average profit margins, I think the MVRV for a lot of coins now is pretty high, I would assume. So yeah, we're in the positives. Ren's MVRV is about 4.4%. As a rule of thumb, the lower the MVRV, the better, because the network is undervalued as a whole. So for example, if I look at all time for MVRV, right? MVRV for Ren. So this is the 30-day MVRV for Ren. So you can see that we kind of tend to bottom out at very similar points. 50%, 46%, 46%, and then here we were at 44% before we bounce back. So this is usually, some analysts believe that the lower the MVRV, the more undervalued the network is, and then as a result, the stronger potential for bounce back. So currently, our rents short-term holders are in the positive, but it's just like 5%. I don't think that there's enough reason for them to start selling and claiming their profits at this point. It's just, I don't think that just based on what I've seen in both private and public chats for Ren, there's no sort of super bearish sentiment towards Ren. I think people are very people that do believe in it. I think they're very high on their upside. So I don't think that 5% is going to do it for him. And then as far as long-term Ren holders, they're about plus 30% on their initial investment, which is high, but we've seen it grow much higher. So it's difficult to say whether this is a good entry point for Ren, right? Because both short-term and long-term holders do have some profit that they can claim, some unrealized profit, and the on-chain activity is kind of just plateauing. So, I don't think at the moment we're seeing like super bullish signs for Ren, but at the same time, I think we're kind of, we're in the middle of the way. Let's see if there's anything as far as Ren's deposits and exchanging flow as well. No, not really. So you can see kind of spike in daily deposits around local tops here, 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 and here, and here also. Like very often, this is what I mean. When you see these spikes in daily active deposits, they tend to point to rises in sell side pressure. Sometimes, especially if we have gone through a pump in the past 2 weeks, this is going to often, coincide with short-term price corrections because not a lot of people are happy absorbing this sell side pressure at a premium because they would have to buy Ren at a premium. Whereas here, we had a similar spike in daily deposits, right? But it was near a local bottom. So we see this happen also quite often as well, where we see sort of short-term capitulation, but Ren bulls are much more likely to buy here and absorb this sell side pressure because they're essentially buying coins at a discount. And if you believe in Ren in the short and midterm, you're okay with stacking up on some bags right here. So overall, we are not seeing sort of any sort of massive rise in sell side pressure for Ren. The amount of Ren being moved to exchanges is also relatively low. Yeah, it seems like it's just chilling at the moment. Sort of short-term spikes here and there, local bottoms and local tops, but overall, nothing too crazy. So I would say for Ren, short-term and long-term holders are in a bit of a profit, which is always, it's not great. If you want to accumulate on a coin, you want to accumulate when they're below break even because there's not a lot of incentive to sell. And daily active addresses, transaction volume, all those point to just kind of a normalizing level. What we would ideally want to see in the next couple of weeks is these metrics start to really pump up again, pointing to an increased amount of interest in Ren. And if that coincides with a decreased sort of sell side pressure, I think we could see another leg up. For now, it's kind of just as its price action as well. It's kind of just consolidating as far as its fundamentals are concerned. Okay, I think that's gonna do it for now for this week's call, guys. Thank you everyone for tuning in and staying until the end. Everything that we've talked about today, you can check out on app.santiment.net. So every metric, every model that we've checked out, every indicator, if you don't have an account already, sign up for a 2-week trial and see exactly how powerful it is. And then if you are interested in, continuing your subscription, there's a 25% discount if you use the code TWIC or This Week in Crypto. So TWIC during checkout. And so you'll be able to kind of, get a first billing plan, whether that's monthly or yearly, at a 25% discount to, check out the platform for longer and see exactly how powerful it can be. I think that's going to be it from my end, at least. Brian, anything that you want to say before we end it?
Yeah, don't forget to spread the word, guys. If you go to your account settings, where you see the avatar where Dino's is showing on his screen, go to account settings and go to create referral link. You get 25 to 35% of any subscription that comes to fruition through you spreading the word about us. So we have software that will automatically track that the code came from you, and we will pay you literally the next day if you do so. So let your friends and family members know that they have a great on-chain and social metrics tool at their disposal should they want to use something like Santiment. And just spread the word about our This Week in Crypto videos. Every new viewer helps, and we really think we have something powerful here. So the more viewership we get, the more we can be supported on these calls and everything that we do. So thank you all for joining, and we can't wait to talk to you all next week.
Be sure to at least like this video. My favorite people in the world are those that also comment on the video below, because all of those things, they help a lot to just let YouTube know that we are in fact producing good content, and it helps us know that you guys enjoy this content and would like to have more of it. We would like to also start producing sort of shorter daily videos as well. If that's something that you're interested in, let us know in the comments below. And in the meantime, we'll talk to you all in 7 days. Check out our Discord in the description as well if you want to talk to us beforehand. If not, talk to you in a week.
Thanks all. Have a great weekend.
Bye, guys.